Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at Oklo.
If you find our talks useful, please consider subscribe, like, and comment underneath. And hey, before we start, make sure to check out the VIP Algos link below in the description. It is a fantastic tool to really elevate your trading strategy. So let's jump right in. Right now, the AI revolution is essentially just eating the power grid alive.
Oh, absolutely. It's an energy black hole.
Right. We are looking at this future where data centers, these massive warehouses full of processors running AI, they require just an absolute relentless round-the-clock surge in power. They literally never sleep.
And that's the core issue, right? Because on the flip side, our current energy infrastructure is leaning more and more on traditional renewables, like wind and solar.
Exactly. And the harsh reality there is that the wind stops blowing and the sun, well, eventually goes down. You can't power a 247 high-intensity digital future with an energy grid that's just inherently intermittent.
It is arguably the most significant structural bottleneck in the entire tech world today. I mean, you cannot run $1 trillion AI infrastructure on a power supply that fluctuates based on the weather.
You just can't.
Right. And that friction is forcing the energy sector to scramble for a permanent carbon-free baseload solution.
Which brings us to Oklo. To set the stage for you listening, Oklo is currently a pre-revenue development stage enterprise. Their entire business model is built around designing and commercializing small modular reactors.
Yeah.
Or SMRs.
It's such a phenomenal case study. We are watching a company try to take highly advanced theoretical nuclear physics, navigate this grueling regulatory landscape, and turn it into a commercial reality.
All while sitting at an $8.5 billion market cap without a single dollar of revenue yet.
Yeah, that valuation is entirely based on future potential.
So let's unpack this a bit. If the goal is to provide uninterrupted power to data centers, how does Oklo's specific tech actually work? Because they aren't building those massive, sprawling nuclear plants with the giant cooling towers, right?
Oh, far from it. No. To understand their moat, you really have to look at the engineering of their flagship model. It's called the Aurora Powerhouse Reactor. Now, traditional nuclear plants use water to cool the reactor core.
Right, which makes sense.
Sure. But to keep that water from boiling away at those extreme nuclear temperatures, you have to keep it under massive, just immense pressure, like up to 2,000 pounds per square inch.
Wow. And I imagine containing that kind of pressure requires some serious infrastructure.
Exactly the point. That pressure requires those giant, hyper-reinforced steel and concrete containment domes we're all used to seeing. It is exactly why traditional nuclear plants take, a decade to build and cost tens of billions of dollars.
Right.
But Oklo is circumventing that entirely. They are using a sodium-cooled fast reactor design. Liquid sodium has a much, much higher boiling point than water.
Wait, meaning you don't have to pressurize it?
Correct. You can run a sodium-cooled reactor at just normal atmospheric pressure.
That's incredible.
Yeah, and because you strip away the need for all that extreme pressure containment, the physical footprint of the reactor shrinks dramatically. You can literally build the components in a factory, ship them on a standard truck, and assemble them right on site.
I always think about traditional nuclear power plants like building a massive, custom, hyper-luxury mansion. Like, every single one is bespoke. You hire the architects, lay a massive foundation, and 10 years later, you are wildly over budget.
And delayed. Always delayed.
Exactly. It's a sprawling nightmare. But these SMRs, these small modular reactors, they're supposed to be like prefabricated modular homes. You stamp the parts out, ship them over, and just click them together.
That is the exact thesis of the SMR industry. Yeah. But, and this is a big but, handling liquid sodium is incredibly complex.
I imagine so.
Yeah, it is highly reactive, especially if it touches air or water. And that brings us to a crucial operational move Oklo just made. They recently acquired a company called Compact Electrochemical Systems, or CEI.
Yeah, I saw that in the filings. But why buy an entirely separate company at this stage? Like, if you are pre-revenue, shouldn't you be conserving your cash?
Well, you would think so, but they didn't just buy a company. They bought a highly specialized capability. CEI brings critical sodium engineering talent directly in-house.
Oh, I see.
Right. When you're dealing with something as volatile as liquid metal cooling, outsourcing that engineering to third-party vendors introduces massive deployment risk. If a vendor delays a part, your whole reactor timeline stalls out. By internalizing that expertise, Oklo is really tightening their grip on their own execution timeline.
Okay, that makes total sense from an engineering standpoint. You absolutely want the people handling the liquid metal on your own payroll.
Exactly.
But let's pause and ground this conversation in the hard financial reality for a second, because the numbers here paint a very specific and, frankly, risky picture. I'm looking at their trailing 12-month earnings per share, their EPS, and it is negative 0.83 cents.
Right, heavily negative.
And they have no current revenue, meaning they're operating at a pure net loss. Yet their price-to-book ratio is sitting at 3.22.
Which is a metric that tells us a lot about market expectations right now.
Yeah, for you listening, price-to-book basically compares what the market values the company at versus the actual literal value of their physical assets and cash on hand. A ratio of over 3 means the market is pricing them at 3 times what their assets are actually worth, purely based on the future potential of this tech.
Yeah.
They are commanding an $8.5 billion valuation while just aggressively burning cash on R&D and acquisitions like CEI.
It is the textbook profile of a development stage deep tech enterprise. You know, their financial health isn't measured by traditional profit margins yet. It's measured by their runway, like how much cash they actually have and how effectively they deploy that capital to hit their technological milestones.
I hear that, but I have to push back a little here. Since they are entirely pre-revenue, burning through cash, and relying on a technology that hasn't even been commercially deployed at scale yet, aren't investors basically just funding a multi-billion-dollar science project right now?
That is a highly valid skepticism.
What's stopping this from being a 10-year waiting game where they just slowly bleed cash?
And that's exactly what the market wrestles with when valuing these kinds of companies. I mean, if the only path to revenue was waiting until 2030 or beyond for the first commercial Aurora reactor to get plugged into a data center, then yes, it would be a purely speculative science project.
Right.
But that is where Oklo's immediate strategic roadmap changes the narrative entirely. They have a near-term catalyst designed to bridge that exact revenue gap.
Okay, you're talking about the Groves isotope test reactor in Texas.
I am. The Groves facility is their immediate path to generating cash. But before we get into the economics of the isotopes, we really have to look at the massive regulatory moat they just secured. The U.S. Department of Energy, the DOE, officially approved the documented safety analysis for the Groves reactor.
Now, documented safety analysis sounds like just standard bureaucratic paperwork. How big of a deal is this, actually?
Oh, it is a monumental hurdle. The DOE does not hand these out lightly. Navigating the regulatory labyrinth for anything nuclear in the U.S. is notoriously grueling. This approval moves the Groves project into the absolute final pre-startup review phase.
Wow.
In fact, the operational data indicates this test reactor is on track for startup this month.
Wait, this month? Like right now?
Literally this month.
So we are not talking about some theoretical milestone 5 years from now. We are talking about imminent, real-world operational status.
Exactly. And once that reactor is turned on, it isn't just a proof-of-concept science experiment. It is specifically designed to produce high-value medical and industrial isotopes.
Okay, let's demystify that term for a second. When we say isotopes, we're talking about atoms that have been altered inside the reactor to become mildly radioactive.
Yeah. Broadly speaking, yes. You place specific, stable materials near the reactor core, they get bombarded by neutrons, and they transform into these specialized isotopes.
And there's a massive market for that. I mean, these are the isotopes used in medical imaging, like when a patient is injected with a tracer to locate cancer cells on a PET scan.
Precisely. And those isotopes have incredibly short shelf lives, sometimes just hours or days.
So you need a constant, reliable domestic supply chain.
You absolutely do. There is immense, immediate, and very high-paying demand for these materials in medicine and industrial radiography. So by harvesting and selling these isotopes from the Groves test reactor, Oklo is effectively bridging the gap to revenue.
Right. They transition from a cash-burning research firm into a revenue-generating entity years before their full-scale power reactors are ever deployed.
It's a genius bridge strategy, and it does something else incredibly valuable for their valuation. It demonstrates regulatory competency. The grueling, expensive, multi-year process of getting a safety approval from the DOE is a huge barrier to entry. Any competitor wanting to build an SMR now has to navigate that same red tape.
And Oklo has proven they possess the internal machinery to actually get through it.
Exactly.
Okay, so let me summarize the upside here.
Yeah.
They have proprietary sodium cooling tech that radically shrinks the size and cost of a reactor. They brought critical engineering in-house. They just got a major green light from the DOE, and they are slated to fire up an isotope-producing reactor this month to start generating actual revenue.
It's a very strong narrative.
It sounds incredibly strong, but this is where I get completely tripped up. If the fundamental milestones are being hit, why does the stock chart look like an absolute disaster?
Yeah. The disconnect between the operational milestones and the price action is stark. It really is the defining tension of the stock right now.
I'm looking at this chart, and it is a bloodbath. Context is everything here. In October 2025, this stock hit a high of $193.84. Today, it is in a deep consolidation phase, trading right around $48.85.
It's a massive haircut.
That is a staggering 74.8% drop from its highs. It is resting just barely above its 52-week low of $44.88. For anyone who bought in at the peak, it has just been a brutal, unrelenting slide. How do you reconcile a 75% drop with the positive narrative we just laid out?
Well, you reconcile it by looking at the underlying momentum and the mechanics of the selling. Yes, the drawdown is ugly. However, if you look at the 13-week return, it sits at just negative 2.71%.
Okay.
From a structural standpoint, what that tells us is that the aggressive panic-style selling pressure has largely decelerated. The stock has basically stopped falling off a cliff and is finally forming a base near these lows.
So the people who wanted out at any price, they're mostly gone.
That is exactly what the volume regime suggests. The current trading volume sits at about 0.82 times the 3-month average.
Let me jump in there. For anyone unfamiliar, when you say a volume regime of 0.82, that means the daily number of shares being traded right now is about 18% lower than what it has been averaging over the last few months.
Right. When you see a stock hovering near its lows on decreasing volume, it generally indicates waning selling pressure. There hasn't been a high-volume panic pushing it below that $44 floor. It implies that heavy institutional accumulation might be quietly occurring at these discounted levels.
And no short squeeze symptoms.
None currently flagged in the data. It's just quiet, methodical base building.
Those building is great, but I have to zero in on a major bearish signal that jumped out of the sentiment data. I need you to explain this because it looks like a massive red flag. The insider flow.
Oh, the insider selling. Yeah.
Over the past 90 days, the insiders, the executives, the board members, the people closest to the tech have been net sellers. And we aren't talking about a few shares here and there. We are talking about a net reduction of 1.29 million shares across 51 separate sell transactions.
That is a big number.
And in that same 90-day window, there are only 16 insider buys. So I have to ask, if the Groves reactor is about to print money from isotopes this month, why are the insiders cashing out and running for the exits?
It's the most glaring headwind to the bullish narrative, absolutely, and it naturally raises a lot of skepticism. But we have to apply context to why insiders sell, particularly for a company with Oklo's specific history. Remember, Oklo came public via a SPAC.
Right, a special purpose acquisition company.
Exactly. When a company goes public via a SPAC, the early insiders and sponsors are typically subject to lockup periods. They are legally barred from selling their shares for a certain amount of time.
Oh, and those lockups are expiring.
Right. When those expire, you almost always see a massive wave of structural selling. These are founders, early engineers, and venture sponsors who have had their wealth tied up in illiquid private shares for years. They are finally taking a victory lap, buying houses, diversifying their portfolios, paying massive tax bills.
So you were saying it is not necessarily a vote of no confidence in the technology, but rather just a mechanical function of the PAC life cycle. People just want some cash after years of building.
In many cases, yes. We obviously can't know their exact internal motives, but structural selling is incredibly common at this stage. And what is vital to look at is the counterweight.
Right, because for every seller, there has to be a buyer who is absorbing 1.29 million shares without the stock price completely collapsing through the floor.
Institutional and long-term retail accumulation. While early insiders are offloading, the sentiment data shows heavy accumulation by long-term holders at these discounted levels. These buyers aren't looking at the day-to-day volatility, they're looking at the overarching macro narrative.
The AI energy demand.
Exactly. They see the relentless demand for AI energy, and they're willing to absorb that insider selling pressure. It is essentially a massive transfer of ownership from the early venture insiders to longer-term institutional believers who are waiting for that multi-bagger potential over the next few years.
Which brings us perfectly to the macro horizon. Because if you are an institution buying up millions of shares at the bottom of a 75% dip, you aren't just betting on Oklo's tech in a vacuum. You are betting on the broader political and economic environment they operate in.
Absolutely.
Let's zoom out and examine the macro-level risks and speculative catalysts that will dictate whether this company thrives or gets crushed.
The broader landscape is heavily influencing the valuation right now. For instance, there is significant market chatter regarding the current Trump administration's broader push to reduce regulatory burdens. The rumor circulating is a concerted effort to fast-track commercial reactor site approvals by the DOE, specifically targeting SMRs to boost domestic energy.
And we want to be incredibly clear here for you listening.
Yeah.
We are remaining strictly neutral on this. We are not taking any political stance on whether environmental deregulation is good or bad policy. We are simply reporting the market speculation exactly as it exists in the data.
Right.
And the reality of that speculation is that it introduces a massive dual-sided catalyst for the stock.
It is a total double-edged sword. On one hand, further executive action to fast-track these site approvals could be an incredible tailwind for Oklo. It could literally shave years off their commercialization timeline.
But on the other hand, analysts note that this kind of aggressive pilot program deregulation could face heavy legal pushback.
Exactly. You try to fast-track a nuclear site, and you immediately get hit with a tidal wave of lawsuits from local municipalities or environmental groups. The risk is that if deregulation is pursued too aggressively, it might become mired in court battles, which could ironically stall future commercial site approvals for years rather than speeding them up.
Wow, so it's a highly speculative catalyst, but it carries immense execution and regulatory risk.
Absolutely.
And it isn't just the political side we have to watch. It's a monetary side, too. The reports specifically highlight the Federal Reserve and the potential actions under Chairman Kevin Warsh.
The Warsh factor is critical for a company like Oklo. If the Federal Reserve pursues aggressive interest rate cuts, it fundamentally changes the mathematical reality for deep tech companies.
Because they rely so heavily on debt to fund their operations. We discussed earlier how they are burning cash to fund R&D and build infrastructure.
Precisely. A lower interest rate environment directly lowers their cost of capital. It makes borrowing money to build these SMR factories significantly cheaper. It extends their cash runway.
Gives them more breathing room.
Exactly. But even with cheaper capital and a potentially friendlier regulatory environment, they still have to actually execute.
And that brings me to the ultimate downside risk, the bear case here. The margin for error is just razor thin. Because despite clearing that DOE safety review for the Groves test reactor, there is still a long road from here regarding the actual commercial deployment of the full-scale Aurora power reactors.
A very long road.
Right. If the Groves test reactor experiences unexpected engineering delays, or if it fails to generate those expected isotope revenues promptly, what happens? With insiders already selling, if management misses this imminent, highly publicized milestone, the stock is at a very high risk of breaking through that base and plummeting past its 52-week lows.
That is the tightrope they are walking. When your $8.5 billion valuation is based on future potential rather than present cash flow, you just cannot afford operational missteps. The market's patience is already tested, as we saw in the stock chart.
So, synthesizing all of this, we have a fascinating, complex picture here. You have a company commanding an $8.5 billion valuation, burning cash, down 75% from its peak, with early insiders taking their chips off the table.
Yep.
Yet they possess proprietary sodium cooling technology that fundamentally solves the size and cost issues of traditional nuclear power. The DOE just gave them a major safety approval, and they are slated to fire up an isotope-producing reactor this month to bridge the revenue gap in a market that is just absolutely desperate for clean energy. How do we synthesize all of these conflicting data points into a final verdict?
Based on the fundamentals, the technical setup, and the overarching macroeconomic themes, the analysis arrives at a bullish score of 7 out of 10.
A 7 out of 10. So leaning positive, but with very clear reservations and acknowledging the high risk.
Exactly. We are looking at Oklo with a multi-year view, specifically an outlook of 12 to 24 months. The core argument for this bullish lean is that the broader market is currently mispricing the structural reality of the AI revolution.
The energy demand is just too big to ignore.
Right. There is an absolute, relentless demand for carbon-free 247 energy to power these data centers, and Oklo has a first-mover advantage. Yes, the insider selling requires monitoring, and the downside execution risk on the Groves facility is very real. But the transition from a purely theoretical concept to an actual operational entity, highlighted by that imminent reactor startup, represents a massive shift in the company's maturity.
And that is exactly why you, the listener, should care about this specific moment in Oklo's trajectory. You're looking at a highly asymmetric entry point. You have a stock that has been absolutely hammered, quietly forming a base right at the exact moment it is attempting to transition into a revenue-generating company.
It is a high-risk play that requires immense patience, obviously, but the setup is undeniably fascinating.
It really is.
And, looking at all this data leaves us with a much larger question about the future intersection of energy and technology. If SMRs truly prove they can become the backbone of reliable AI energy, it shifts the power dynamics of the entire global economy. It makes you wonder, with the trillions of dollars being poured into AI dominance, how long will it be before the massive tech companies themselves decide they simply cannot wait on the traditional slow-moving utility grid anymore?
Oh, wow.
Right. How long before big tech bypasses the utility companies entirely and just starts funding or outright acquiring these nuclear companies directly to guarantee their own proprietary power supply?
Now, there is a thought to mull over. If you are building a multi-billion-dollar custom AI data center, maybe you don't wait for the power company to run the lines, you just buy the modular nuclear plant and plug it in yourself. Well, that wraps up our analysis on Oklo for today. A quick reminder to subscribe, like, and comment if you found this breakdown valuable. And once again, do not forget to check out that VIP Algos link down in the description to gain an edge in your own trading. Thanks for joining us on Smart Wealth with Joshua.